Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Friday, May 9th, 2025. Today's episode begins with our headline, VIX Futures gets interesting with potential China deal incoming. The VIX Futures has been pretty inverted for about a month now, and we're finally a little bit uninverted back into contango here, kind of, for the next 2 months, and then inverted again throughout the rest of the curve, suggesting the markets aren't on fire now, but we're expecting things to get worse before they get better. For me, this is sort of the professional traders saying very loudly they see Mr. Market as being complacent here, and maybe expect him to be a little bit more complacent while they shouldn't be so confident going into the next few months. The big news today is we might be going into potential deals with China over the next few days, with the talks expected to end on Monday. The VIX futures here is sort of saying, yeah, we expect the news to be good. I mean, think about it. Trump's the deal maker, right? He comes in hard and says, hey, I want the whole world. And then he says, oh, well, maybe I'll settle for a little bit less. And that's the whole tactic. And he's pretty famous for making deals. And that's sort of what everyone is sort of expecting. There'll be a good deal. There'll be good news on Monday, but not so good that markets should necessarily get so excited about things continuing to get better. There's the 10% tariff is still there. We're still expecting tariffs from China to be pretty high. Consumer confidence is in the toilet. There's lots of other indicators still flashing red here. This is while the market is still having a bit of post-traumatic stress disorder from the initial, tariff attack, we'll call it. It sort of sets up a short-term upward movement maybe in the stock market before it obviously will go back down, is kind of the way I'm looking at it. But that's just me and my crystal ball. Next headline, I want to bring up XLV. I brought it up a few shows ago. This is a healthcare ETF, and I'm seeing sort of an asymmetric opportunity here. From the previous all-time high of the S&P 500, we're currently down about 8%. And while it makes sense for something like XLE, the energy ETF, to be down even more by 16% now, not only because of the news of increased oil production, but because this fund as a whole over a long periods of time has an elevated beta, which means it's supposed to be more volatile than the S&P 500. In other words, when the S&P 500 goes down a little bit, this is actually supposed to go down a little bit more. However, XLV, the healthcare ETF, this fund is supposed to have quite a bit less volatility than the S&P 500. Its beta is only, I believe, 0.75 of the S&P 500 being 1. So when the S&P 500 drops by 1%, this is supposed to go down by like 0.75%. Now with the S&P 500, like I just showed you, going down 8%, this fund is still sitting at a 17% loss. It's possible that the peak of the price of XLV may have gotten ahead of itself. Maybe, and maybe not. Its current actual PE ratio, according to marketchameleon.com, is about 25, so that's still pretty high. That's still pretty close to what we see in the S&P 500. However, when you take out the extremes of negative earning companies and very low or zero earnings companies, you get a PE ratio of only about 17. It's calculated through a weighted harmonic average, which takes out the tails. And when you do that, you only get a PE ratio of 17. So I'm seeing already pretty good asymmetric opportunity here, especially, for example, let's say tech and the S&P 500 get another leg up, and this continues its path as it's going to the downside. This could provide, it could already be a good opportunity right now, and it could potentially the opportunity could potentially grow from here. We'll have to keep an eye on it. I'll probably get some of this fund if things continue to spread apart for sure. So something to think about, something to potentially have on your radar is kind of what I'm seeing. Again, no advice on this channel, never any kind of advice. Now moving on to the community topics. What moves, if any, did you make today? Have no fear in the comments section. I love hearing and reading through all of your moves and ideas. It helps me gauge what the community is doing and thinking. For today, Robschild did not do anything. Robschild sits on hands. There are charts to talk about when we get there, but coming up, as always, continuous tariff updates. We should be getting some really big updates over this weekend especially. I'm hearing Sunday night we're expected to get some news. I will very likely do, if you happen to know, I've been doing live stream Sunday night futures. This Sunday could be an especially interesting one. I don't always leave those videos up because it's live and messy, but just wanted to mention that. We also have next week CPI and PPI coming out, and this is every week the initial and the continuing jobless claims, but because last week the continuing claims hit a new high, I'm starting to think this might be something to really start paying attention to. You don't always have to pay attention to it if it's, just staying low, but I'm starting to see a little bit of red flags here. If initial jobless claims, for example, really starts to spike to the upside, that's like the first real hard data that things are getting a little out of control. And we haven't seen that exactly yet. As always, thank you for watching, subscribing, commenting, and supporting. The subscription button's right over here. Just put your mouse over it and click subscribe. And many thanks for all of the wonderful support. Info also found in the description. No changes to the daily reminders macro views, although I don't even have, notably, any tariffs in here, and I still think that this is enough information that we should be very concerned about. I will likely add that in the near future, but for now, these things are still extremely important things to know about. Read about them on my website in the description titled Daily Reminders Macro View. And no changes to the crystal ball ratings nor the Robschild portfolio seen here. Moving on to the charts, Battle Zone. Mr. Market really doesn't know what to do here. After all, we're kind of just waiting to see what happens with this China deal. My personal take on it is that the best deal in the entire possible world that we could possibly think of with China can definitely get Mr. Market excited and send him to the upside, and I think it's going to be very temporary. I think it's going to collapse straight back down, personally. But anything less than a really good sounding deal that happened is very likely, in my opinion, to send us another leg lower in stocks generally. TLT, my favorite place to be, now forming on a day-to-day basis. Bit of a bear flag here, so it looks like just from the past 2 days that this may play out to get back to my buying zone where I will be buying more exposure to long-duration treasuries. A chart that caught my eye today, I still have large put positions on HYG, some set to expire in September and some not till January. This chart caught my eye today because we've been going oddly sideways here. You don't often get 8 little candles in a row going sideways, and it's a decent proxy for credit spreads in general. And, this doesn't usually trade for that long in that tight of a range, and so that just tells me that we're sort of setting ourselves up for a larger move, and it would be very, very strange for that move to be to the upside, simply because if credit spreads can only go so tight before you get the same yield lending to your neighbor's dog that you get from a U.S. Treasury, and In other words, credit spreads can only get so tight. This thing it has a limited upside. HYG can't go to the moon unless you have, I guess, rates slammed to the floor, and you have people thinking that, like, oh, the economy is doing great, which isn't going to happen. Those things aren't going to happen at the same time. You're not going to get rates to slam to the floor, because if rates slam to the floor, it means the economy is falling apart. That means credit spreads are widening, and so this falls anyway. So I highly suspect we're prepping ourselves for a pretty large move to the downside in HYG, potentially getting lower than our previous bottom through this tariff tantrum phase, which bottomed on April 9th at $75 in HYG. Bitcoin today hit around $104,000. Very important to keep an eye on Bitcoin, especially with these tariff talks. Again, if the news is really good out of the tariff talks and Bitcoin goes up, then that's risk on environment. That's liquidity is flowing, expected to continue to flow healthily. More so if it's a healthy bull market in Bitcoin and goes sideways and doesn't turn out to be in some kind of like blow off top formation. Anyway, this is a time period worth paying attention to Bitcoin. Also, the dollar, after breaking above 100 in the dollar index, the DXY index, settling on it today, people trading currencies are bullish the dollar right now, period. The bulls are winning here. Oddly, at the same time, Bitcoin is getting a bid, right? Next, I want to mention crude oil going up slightly. Nothing to write home about. More of a bear market rally more than anything else. Again, crude oil has not been in this cheap of a zone since 2021. This is a huge sign that an economic slowdown is expected. This is all while Dr. Copper remains neutral on the issue with a pretty big fight today. Look at these very large wicks to the upside and to the downside, battling it out. Should copper go up? Should copper go down? It appears that copper cares about this tariff deal with China, especially considering China is one of the biggest movers of copper. If China is going to be doing well, copper is going to go up. If China is going to be not doing well, China's going to go down. Copper's going to go down. When you zoom out on this chart, and when you think about the copper to gold ratio, for example, gold is screaming things are going to get more expensive, and copper is saying, yeah, a little bit, not that much, and it's going to revert. We're going to have a period where either gold ends up being right and copper goes to the darn moon, or the opposite, where we have gold collapse and copper stay flat, or even gold collapse and copper just collapse a little bit less than gold, actually. There are definitely some very passionate gold bugs on this channel commenting in my videos. Some of you don't think I should be saying that gold is in a bubble here. My biggest response is, how much copper is worth how much gold? Is 1 ounce of gold worth all of the copper in the world? Certainly, I wouldn't think any reasonable person would believe that. But what do I know? I'm just a guy with a crystal ball. And that's all from me and my crystal ball. I hope you enjoyed. And thank you for watching, and see you next time. Robschild.